Welcome to the Clean Slate podcast, brought to you by clearrank.com. Right now, you're likely trying to make sense of a market that's still, digesting things like Trump's tariffs, the widening trade issues with China.
Ongoing geopolitical tensions,
Yeah.
and just these constant shifts in what we expect with interest rates. It's a lot.
It really is.
That's right. And so for April 2025, we wanted to try and cut through some of that noise. Our analysts here at ClearRank, Michelle Sophia and Sean David, they put together their top 5 stock picks. These are companies they believe offer a good mix of potential growth and maybe the kind of stability you might be looking for in what feels like a pretty unpredictable market.
Okay, and these aren't all clustered in one place, right? We're looking across different sectors.
Exactly. Yeah, to give a more well-rounded view, we've identified companies in software and data analytics, semiconductors, aerospace and defense, streaming media.
And even consumer staples.
And consumer staples, yeah. Specifically, we're going to talk about Palantir Technologies, that's PLTR, then Micron Technology, MU, Karman Holdings, KRMN, Netflix, NFLX, and Philip Morris International, PM.
Got it. So the idea here is to give folks a clearer picture of why these 5 stood out this month, highlighting what could drive them, maybe what challenges to keep an eye on.
Precisely. Especially in a market that feels, frankly, more choppy than usual.
Okay, let's kick things off then. Palantir Technologies, PLTR, and software and data analytics. This one's seen a huge run-up, hasn't it?
Oh, it has. I mean, over the past year, their stock price is up, 245%? Pretty significant.
Wow. What's behind that?
Well, it seems to be a combination. They've always had those sticky government contracts, defense, healthcare. But now they're seeing a real surge in demand from corporations, too, for their AI-driven data platforms specifically.
Right, so that commercial side is becoming much more important for them.
It really is. Commercial revenue is getting close to nearly half of Palantir's total business now. And Michelle Sophia over at ClearRank, she points to their pivot, their strategic move towards providing these AI solutions for enterprises. Things like supply chain optimization, fraud detection.
Okay.
And that's key because it builds that recurring revenue. Investors really like to see that.
So even after that massive run-up, is there still maybe an opportunity here, or is it more of a watch and wait?
Well, Michelle seems to think the recent pullback in the stock price could offer a potential entry point, for investors with a longer view.
Okay.
A key thing to watch, a catalyst maybe, is the potential expansion of U.S. defense contracts, especially those related to modernizing AI infrastructure.
But there are risks too, I assume.
Oh, definitely. There's still a heavy reliance on U.S. federal spending, that's one thing. And the commercial adoption, while growing, might just be slower than some hope. That's always a possibility.
Okay, let's shift gears. Let's talk semiconductors. Micron Technology, MU, this whole sector feels like it's just constantly buzzing.
It really is. And Micron finds itself really well positioned, actually. There's this DRAM tsunami happening.
DRAM tsunami.
Yeah, basically driven by all the data center upgrades and especially the AI workloads. They just demand huge amounts of high bandwidth memory.
And Micron makes that kind of memory.
Exactly. They're a major player.
Yeah.
And they've been pretty smart about it, too. They focused on cutting costs, and they have some real technological leadership with their DDR5 and HBM3E chips. That puts them a bit ahead of some competitors, and it's led to better margins, better than Wall Street expected, actually.
And how's the stock done?
It's up about 18% year to date. And even with that increase, the valuation, looking forward, seems pretty reasonable. The forward PE is around 9, give or take.
Okay. And Sean David, our senior tech analyst, he had a thought on this, right?
Yeah, Sean highlighted that, all the big cloud providers think Amazon, Google, Microsoft, they're actively locking in their memory supplies for these big AI infrastructure builds.
Yeah.
And he thinks Micron is a really key beneficiary of that whole boom, maybe even more than people realize.
So what's next for them? What should we watch?
Well, their Q2 earnings are coming up on April 28th. That'll be important. We're expecting to see continued strength in memory pricing and hopefully inventory levels normalizing further.
And the risk. Always a risk somewhere.
Always. With chip companies like Micron, it's the cyclical nature of the business. Pricing goes up and down, and there's always the risk of building up too much inventory later on. A glut.
Right. The classic semiconductor cycle. Okay, moving on. Aerospace and defense, Karman Holdings, KRMN. This one's newer to the public markets, isn't it?
That's right, yeah. Recent IPO. And they started off really strong financially. Notably, no debt on the balance sheet. Plus, a record backlog of orders around $600 million.
Wow, $600 million backlog for a recent IPO. That's substantial.
It is. And a big potential boost for them is this new Pentagon initiative called Golden Dome.
Golden Dome, what's that about?
Uh, Basically, it's focused on strengthening U.S. air defense capabilities, modernizing systems. Karman makes components and systems that fit right into that, so it's expected to really help their growth.
And in the current sort of global climate, that defense focus could be an advantage.
It could. And another point is their limited exposure to tariffs. That gives them a bit of insulation from all the trade disruption talk we were just mentioning.
Makes sense.
Yeah, and Investors Business Daily also pointed this out. Karman's big backlog and strong financials look pretty good right now, especially with all the geopolitical uncertainty floating around.
So what's the key catalyst or thing to watch for Karman?
Definitely the Pentagon budget approvals, particularly for these next-generation defense contracts. Those are expected sometime around late April. That's crucial for them.
And the potential downside?
Well, the usual challenges for a newly public company. Execution risk, can they deliver on that backlog smoothly? And of course, potential delays in those big defense contract approvals. Government stuff can always take longer.
True enough. Okay, let's pivot again. Streaming media, Netflix, NFLX, they've certainly been making headlines.
They have, yeah. And mostly for good reasons lately, it seems. The crackdown on password sharing. That seems to be working.
And the ad-supported plan too, right?
And the ad-tier subscriptions, exactly. Both seem to be driving growth. Plus, they keep getting strong engagement with popular content, things like Star Wars, Skeleton Crew, and everyone's waiting for Stranger Things Season 5.
Right, and that's helping their bottom line.
Definitely. They're generating good free cash flow now, enough that they're actually buying back their own stock. Pretty aggressively, it's up. Like 8.7% just this year from buybacks.
So the strategy's paying off. What does Michelle Sophia think about their position now?
Michelle's view is that Netflix is really cementing its dominance in streaming. She points to that ad tier adoption, yeah, but also their personalized content recommendation engine is just really sophisticated. It gives them a big edge.
Okay. What should we be watching for next with Netflix?
Their Q1 earnings report, that's coming up soon, April 17th. That's a big one. The market will be watching that ad tier revenue growth very closely, and also global subscriber numbers.
And risks, competition, content costs.
Yep, both of those. Content expenses are always rising, and competition is always there. There's even talk about TikTok maybe moving into longer videos, which could be interesting.
That's a new angle.
It is. And, while sentiment is pretty positive right now, there's always the risk of an earnings disappointment in Q1, however small it seems now.
Got it. Okay, last one. Philip Morris International PM Consumer Staples, often seen as more defensive, right?
Exactly. More stable, typically. And their performance kind of reflects that, up 75% over the past year.
Yeah.
It appeals to income-seeking investors, too.
Why is that? Dividend.
Partly the dividend, yeah. It yields about 4.8%,
Right.
which is attractive. But also, a big part of their story now is the shift to smoke-free products. Things like their IQOS heated tobacco system.
Yeah, the reduced risk products.
Exactly. And that's not a small part of the business anymore. It's now about 40% of their total revenue.
40%. Wow, that's a significant shift.
It really is. And they've held up well this year, too, despite market wobbles. Investors Business Daily noted their 32.6% year-to-date gain. They attributed it to that successful shift and also their pricing power, especially in emerging markets.
And Sean David's take on PM.
Sean sees Philip Morris as kind of a classic bunker stock.
Bunker stock.
Yeah, something potentially more resilient if things get rough. Their global footprint, the defensive nature of their cash flows. He thinks it makes them a decent holding, especially if inflation were to pick up again.
Interesting. What are the key catalysts or risks for Philip Morris then?
Key thing to watch is regulatory approvals for their next generation of reduced risk products in key markets around the world. Those approvals are expected sometime in the next, say, 6 to 12 months.
And the risks are probably regulatory too.
Primarily, yes. Potential crackdowns on nicotine products in general, or maybe just slower than hoped for adoption rates for these newer smoke-free technologies.
Okay. So looking at these 5 picks together, Palantir, Micron, Karman, Netflix, Philip Morris, what's the kind of overarching strategy here from Michelle and Sean for April?
Well, it seems to be about balance, really. Trying to navigate this choppy market by mixing different types of opportunities. You've got the higher growth, maybe higher volatility tech innovation with Palantir and Micron, then the resilience of defense with Karman, the established leadership in streaming with Netflix, and then that stability from consumer staples with Philip Morris.
So kind of spreading the bets across different themes.
Pretty much. And for listeners thinking about their own portfolios, The takeaway might be the importance of that balanced exposure.
Right. Maybe pairing some of those volatile tech names with more defensive allocations.
Exactly. That can be a smart way to manage risk right now. And as Michelle Sophia advises, in these kinds of markets, it's really worth focusing on companies that have proven pricing power
Mm-hmm.
and strong underlying secular trends supporting their growth. And she also mentioned, if you are looking at those higher volatility stocks like PLTR or MU, recent pullbacks could potentially be seen as entry points for the long term, of course.
That's a really helpful way to frame it. Thanks for breaking down these 5 picks for us.
My pleasure. Glad to do it.
And just one final but really important reminder for everyone listening. The information we've discussed today, it's really just for informational purposes. The data, the stock prices, the opinions we've shared, they reflect the market conditions as of right now when we're recording this.
That's right. And before making any investment decisions, it's absolutely essential to consult with a qualified financial advisor, someone who understands your specific situation, your goals, and your tolerance for risk.
Definitely. Thanks again.